If you're renting in Dallas-Fort Worth right now, I need you to hear this before you sign one more lease. The person who keeps renting this year and the person who buys this year can be looking at a six-figure net worth in 10 years from now with the same job, same paycheck, same monthly budget, but two completely different financial lives. And most people never see it coming because nobody ever sits down and shows them the actual math. So that's exactly what I'm going to do here today. Near the end of this video, I'm going to introduce to you two of the same people with the exact same income, monthly house budget, with one of them renting for the next 10 years and the other one who buys. And when we fast forward a decade, one of them is sitting roughly $200,000 in equity, while the other one is writing the biggest rent check of their entire life with nothing to show for it. I'm gonna walk you through every number line by line so you can decide for yourself. And real quick, before we get into it, if you're a W-2 employee here in the DFW area and you're trying to figure out whether buying or renting actually makes sense for your situation, reach out to me. My contact is in the description. A free 15-minute call can now genuinely save you years because the people who win in real estate aren't the ones who guess, they're the ones who actually understand the numbers before you make the move. So if that's you, don't wait until the end, reach out today. I'm Casey, and this is the Dallas Blueprint. I moved here from Austin and I help first-time buyers and relocators, investors all over the Dallas-Fort Worth Metroplex. And I make videos for one reason, to explain things over that most agents actually skip. So right now, let's get into why owning beats renting for a W-2 employee here in DFW. And then we'll meet two of the same people as mentioned earlier for a case-by-case basis. Let's start with one that almost nobody explains correctly, the tax side. As a W-2 employee, you don't get a lot of write-offs. Your taxes come out every single paycheck before you ever see the money. Owning a home is actually one of the few legal ways a regular W-2 earner can lower their taxable income, and here's why it actually works. When you own, there's two housing costs that become tax deductions. The first one, the mortgage interest, which you pay, and the second one, the property taxes, which you pay per diem every single year. In early years of mortgage, almost your entire paycheck is literally interest and property taxes. So those numbers are large. And here in Texas, our property taxes are extremely high. So that's a trade-off for having no state income tax, unfortunately, but you can write it off on your income taxes. So you got two meaningful deductions stacking up side by side for the first few years. Now here's the honest part. These items are deductions, which means they only help you if your total deductions add up to more than the standardized deduction. For 2025, the standard tax deductions was $15,700 if you're single and about $30,000 if you're filing jointly. So you have to clear that bar before the write-offs put money back into your pocket. For a lot of single W-2 buyers in DFW, the mortgage interest and property taxes blow right past the single standard deduction, and you start saving money real quick that first year. Often a couple $1,000s a year in early years that go right back in your pocket. For married couples, the bar is even higher, so you've got to run your actual numbers. And here's a recent change that matters a lot for the Dallas-Fort Worth buyers specifically. There used to be a hard $10,000 cap on how much state and local taxes that you can deduct. This includes property taxes. But in 2025, that cap jumped all the way up to $40,000. And that's a huge difference in DFW because if you own a nicer home with a bigger tax bill, north of 10 grand, you can now deduct the whole thing. And I'm gonna say this clearly because credibility matters to me. I'm a realtor, not an actual CPA, so please run your numbers specifically on a situation for case by cases by an actual tax professional. But the bottom line in general is that owning a home gives a W-2 employee real deductions that renting will never ever give you. A renter writes a check every single month and gets you zero tax benefits. That brings me to the second benefit, and this might be the most powerful one of all. Your housing payment stops moving. When you lock in a 30-year fixed mortgage, your principal and interest payments are completely frozen for 3 decades. The same payment in year 1 is the exact same payment in year 5, year 10, year 20, and all the way up to 30 years. It does not go up. Now, compare that to rent. Rent goes up. The rent historically climbs somewhere around 3 to 5% every single year. Doesn't sound like much, right? But let's run it. A $2,400 rent today, climbing 4% a year, becomes $3,400 a month in 10 years. You're literally losing $1,000 every single month if you rent for the next 10 years. Same apartment, same square footage, just a bigger check every single year. Forever. You are literally paying someone else's mortgage and watching that price climb while you do it. And the homeowner, their principal and interest never change. Yes, taxes and insurance drift up a little bit time to time. I'm not going to pretend they don't, but the biggest chunk of that payment is actually locked. Think of what that does over a 30-year career. The renter's housing cost is chasing inflation up a hill. The owner's is standing still. That is one of the most underrated wealth building advantages in this entire country, and it's available to a regular W-2 employee that's right here in DFW. The third benefit is one you can't put a dollar figure on, but every single homeowner feels it. It's peace of mind. When you own, nobody can jack up your rent. Nobody can decide not to renew your lease and make you move your family in 60 days or less. Nobody can sell you a property and hand you a notice. Nobody can tell you that you have to paint the walls, or nobody can tell you that we want to renovate the kitchen or put your kid in a school district and actually stay there. That stability has real value, especially for the couples and the young families I work with all over Frisco, McKinney, Prosper, Little M, Forney, Princeton, whatever you want to call it. You're not just buying a house, you're buying control over your entire life. And here in Texas, ownership comes with a couple of protection renters simply don't get. The first protection is homestead exemption taxes. When you own and you live in the home as your primary residence, you can file homestead exemption, and the state knocks off a big chunk of the yearly value where your school taxes are calculated on. Texas voters just raised that exemption from $100,000 to $140,000, which saves the average home buyer around $1,400 a year on their school taxes. It also caps how fast your taxable value can rise each year, so you're protected from getting taxed out of your own home in a hot market. On top of that, Texas has some of the strongest homestead protection laws in the entire country, shielding your primary home from most creditors. Renters get absolutely none of that. And then there's the big one, which is the engine underneath all this, and that's equity. Every single month you make a mortgage payment. A piece of that payment pays down a piece of your home's value, which belongs to you, and that's forced savings. You're literally building wealth just by living your life and paying something of your housing cost, something you have to do anyway every single month. If you added appreciation over the 5, 10, 15, 20 to 30 years, DFW home values have steadily climbed for decades because people are moving here all across the country, like California, Chicago, and New York, and even, yes, from Austin, like myself. And you've got two wealth engines running at the exact same time. You're paying down the loan while the value of your property slowly increases. The renter has neither. The renter's payment buys them 30 days of a roof, and then it's gone. Okay, so I told you about a case-by-case basis that we're gonna run with two people, and now it's time to actually meet them. This is where all this information actually come together. So let's meet Marcus and Ashley. They make the exact same income, $95,000 a year, both W-2 employees. They have the same monthly budget. The only difference is the decision they make every single year. Marcus decides to keep renting, but Ashley decides to buy. Marcus rents a nice 3-bedroom in the suburbs for $2,400 a month. Comfortable, no maintenance, no property taxes, no problem. And on paper, a little cheaper every single month than buying. But every year, his rent goes up about 4%, which is very normal for DFW. By year 10, that $2,400 rent has climbed to around $3,400 a month. Added up for an entire decade, and Marcus has paid roughly $346,000 in rent. And here's the gut punch. At the end of the 10 years, Marcus owns absolutely nothing. His equity is zero. He has a stack of receipts with higher rent payment than he's ever had with nothing to show for it, and that's it. Now let's get to Ashley's part. Ashley, she buys a $330,000 home, puts down 5% on this home, which is about $16,500, and locks in a 30-year fixed mortgage. With every single thing included, like interest, taxes, mortgage, and whatever HOA might be considered, let's go ahead and grant it around $2,800 a month. So $2,400 versus $2,800 a month at the start. Ashley pays roughly $400 a month more than Marcus in the early years, which is real, and that's the part that most hype videos will actually leave out, which she's literally paying $4,800 a year. But watch what happens. His rent increases every single year, and by year 8 or 9, his rent actually catches up and passes what Ashley actually pays. Meanwhile, Ashley's principal and interest never moves. And the whole time these two things are happening that Marcus gets none of, number one, she's paying down her loan every single payment, and the bigger slice goes to the principal. And number two is the home is actually appreciating. So let's be conservative and say DFW property values rise just about 3.5% every single year. So on a $330,000 property, that value of the home is worth $465,000 in 10 years. Her remaining loan balance is down to roughly $266,000. Subtract those two values from one another, and Ashley is sitting around $200,000 in actual equity. Let's put them side by side now so we can actually really compare of how it looks, because this is a whole ball game, not just about rent and monthly values. 10 years later, Marcus paid $346,000 in rent and owns 0%. 10 years later, Ashley paid a bit more a month, yes, but she's holding $200,000 in equity and her payments are now lower than his. And she's received tax deductions that Marcus never saw a dime of. Even if you account for the extra monthly payments that she actually paid throughout those 10 years, the cost of someday selling Ashley is ahead by well over $100,000. Same paycheck, different decision, which costs you about 6 figures of wealth. And that's not a trick, that's not a hype, that's just what happens when your housing cost builds something you own instead of disappearing into someone else's pocket. And the most important number in this entire video is the year you start. And every single year is one more year that you're missing out of locked-in payment that you can't get back. So here's what I want you to do. If you're a W-2 employee anywhere in the Dallas-Fort Worth area, all the way from Frisco, McKinney, Plano, Garland, south to Oak Cliff, or north to Little M, any of it, and you've been sitting on the fence wondering if you're ready, let's talk. I'll run actual numbers with you, with your income, your budget, the programs that you might qualify for, like down payment assistance programs, and what your Marcus versus Ashley math actually looks like for your certain situation. This is not any pressure tactic or a sales pitch. This is just clarity for something that you should know. My contact information is in the link right here. The first step is always just a simple conversation. You don't need to rush, you just need to understand, and that's exactly what I'm here for. So the last thing I'm gonna leave with is this. It's Proverbs chapter 24, which says, by wisdom, a house is built, and through understanding, it is established. Through knowledge, its rooms are filled with rare and beautiful treasures. Building something that lasts starts with understanding, and that creates wisdom, which creates numbers that work in your favor. So go build wisdom. Thank you for watching. I'll see you in the next one. God bless.